Let's take a look at oil prices. Oil holding under $80 a barrel as the U.S. and Iran trade strikes for a fifth straight day. President Trump is weighing whether to expand U.S. military operations in Iran. But despite the ongoing conflict, the president sees inflation heading in the right direction.
Do you see inflation at the end of the year less than it is now?
Well, I think so. I think what's happening is oil's going to be a little bit of a yo-yo for a while. It goes up a little bit, goes down a little bit, and when this is over, oil is going to drop like a rock.
Would you be okay if the Federal Reserve paused rates for the rest of the year?
Well, it's better than raising them. Okay, I mean, I'd like to see them go down. I'd like to see our country have the lowest rate anywhere in the world.
Okay, I'm actually not surprised to hear him say that. But let's stick with inflation for a moment, because the number was a good number, but now all of a sudden some of the volatility is back in the oil market. Taylor had some great stats that she shared with us yesterday about how the average prices to yield the number that we saw, the CPI number, we're still in the range and have some room there for the rest of July, as a matter of fact. So don't expect to see this quick spike because of the volatility. So if we stay range bound, we'll actually be in good shape. And if the president takes action to end this war in some way, quicker, sooner than expected, then those prices will continue to drop. That'll all be good for Americans.
Yeah, and I think the inflation outlook right now looks pretty decent. But the fear was going into that print was that we would get a hotter than expected inflation number, that it would be worse. That was something that Fed Governor Christopher Waller had highlighted in a speech on Monday. He said, I might consider raising rates if the number is bad. So I think to President Trump's point, maybe it is just the Fed can hold rates steady now, and you wait to see what happens with that inflation data over the next couple months. Maybe you get room for a cut end of 2026, early 2027, but I think you have to be happy with, okay, the increase has stopped. In order for inflation to start coming back down, we needed it to stop going higher first. So it stopped going higher. Now you need several more months before you start getting really good prints where you're moving back to that 2% target.
Okay, and before the conflict in Iran, Brian, we heard the president talking about interest rates coming down 300 basis points and on and on and on. And I've been saying since then he's actually pretty reasonable and he understands the situation. He sees the oil price. He is not going to push on Warsh in any way. And I think what he said there is rather than have a hike, if you do believe that this is transitory and the number's not going to actually go up, then if we stay put for now, that's acceptable.
Yeah, let's not gloss over the fact that President Trump is saying some very different things on interest rates, right?
Oh, yeah.
I mean, I don't know, maybe Edward Lawrence has like a kind of cast a spell over him, but, our interest rates, not going to go down. And President Trump says at least they're not going up. What that tells me, it tells me that he really trusts Warsh, which is good. It doesn't tell me that Warsh is his puppet. He's not. I think the comments that Kevin Warsh made this week and the way he reacted to the latest inflation data tell you he's not Trump's puppet. But it does tell me that President Trump really trusts Kevin Warsh. And it also tells me if he does trust Kevin Warsh, he really wants to beat inflation. He really wants to get inflation back down. He knows it's a problem and he wants to get it back down. And I thought that was very honest and actually very confidence inspiring. His point about oil, what's going to happen to oil prices, said they're going to yo-yo. Then they're going to go down. Again, I think that's honest. We're in the middle of a renewed war with Iran. Oil prices are going to move around. That's true. They're not just coming all the way down. But I agree with him. The long-term perspective on oil is we've changed the game and it's coming down.
But in the meantime, we have to service our national debt, and people complain going into the midterms especially about the high cost of ownership, home ownership. Interest rates is part of that story, Dagan, and that is something that you, not just the home piece, you talk about the high cost of servicing our debt, and that's a reality right now.
So if we look at the 10-year is holding solidly above, it's below 4.6, but solidly above 4.5. And any move up in interest rates, I think this, and we're going to talk about Warsh and the Federal Reserve in the next block, but one of the reasons that the Federal Reserve cannot raise interest rates here is because so much of our debt is on the short end. Roughly 1/3 of it rolls over in a year or less. And because the interest on the debt on average so far this year is almost $117 billion every month. It's over $1 trillion so far in a 9-month period. That's 14% higher than it was the previous year. Any move up in interest rates, you could have the national debt top Social Security. And this is at a time when Social Security, if Congress can't get its act together and actually address it, because the benefits are going to get cut automatically in 6 years if they can't fix it. The hospital trust fund for Medicare, it's 7 years that it runs out of money. And I forget how much the benefits get cut.
Like on average, 17,000.
But like pennies on the dollar. It's like, I think for the hospital trust fund, it's something like 9 or 10 cents on the dollar that they get cut. But we're on a razor's edge with the interest on the debt. Can you imagine? So I've used this stat the other day that almost half of the personal income taxes collected equal what we pay in interest on the debt, almost half. Can you imagine taking half of your pay and it just goes to pay the interest
On your credit
on
card.
your credit cards? That's it? And so that comes first, and interest on your credit card. It's just insane where we are. And the fact that this reconciliation coming out of the House has no offsets, they're out. I don't care what party they're a member of, they are out of their minds.
Good news or bad news?
Let's go with the bad news first, and then we'll end it on a high note.
Okay. The bad news is the 30-year mortgage just went up to a 6.55. A week ago, 6.49. But the good news is 6.55 is better than a year ago at 6.75.
I know, but we were under 6.
I know. You asked for the bad news first, Jackie,
Okay,
and I don't lie. More good news, though, just for you. Retail sales this morning were strong. 7 of the 13 categories posted gains. Gas station receipts fell 5%, the biggest decline since 2022 because average national gas prices at the pump fell 50 cents a gallon. Receipts at non-store retailers jumped almost 2%, the biggest increase in a year, maybe in part because Amazon had their Prime Day event. Sporting goods, hobby stores, electronics, appliance stores, those rose. Motor vehicles and parts dealers saw the most increase since July of 2025. Spending at restaurants and bars, that went up as well. Even better, the control group, which is the factor into GDP, on an annualized rate was up 9.2%. CPI showing just a 0.4% increase, excluding food, energy, and used vehicles, which means the majority of this is real consumer spending. The consumers are spending. Quick note for the
I'll just add, the real retail sales gain was 1.1%, which is huge. So adjusting for inflation, and then the ex-gasoline real sales gain was 0.8%.
For the first time since the start of the year, small business profitability growth turned positive in June. Lower income households have seen the fastest after-tax wage growth compared to pre-pandemic levels, and they're spending.
Okay.
That's all I've got for you.
So that was good news at the tail end there. I'll take that. And let's tie it back, Josh, to everything else that we're seeing. Earnings, banks killed it. The fundamentals, the groundwork is all there. If we get past this conflict, I keep saying for the second half of the year, we're ready to rip. Oil comes down, everything would be great. The question would be, can it happen?
Yeah, I think it can. Taylor just gave the retail sales numbers, which were great. We talked about CPI, PPI, the other inflation metric you can put in there. And then you look at earnings. I mean, Goldman Sachs surprised Wall Street by 45%. Their earnings actually grew 45% more than Wall Street expected. And the actual growth was 92%. Year over year. JP Morgan raising their guidance for the full year. Across the financials, you're seeing very strong earnings. You're seeing strong earnings from the airlines. We'll see as we get later into earnings season. We're not really talking about necessarily consumer companies here, but overall, I mean, you're looking at the S&P 500 expected to produce year over year earnings growth at almost 25%. So that is a great backdrop right now. And I think in the market, you're seeing some positive movements too. People are selling memory stocks. That's probably a good thing. Let's move out of that trade. We're done with that for a little bit now. And people are buying shares of Goldman, buying shares of JPM. You're seeing that broadening trade start to come back. Apple's a great business. Apple's at an all-time high. So I think the market is being rational too throughout all of this, which is why you're not seeing, we're talking about all this good news, and then you're looking at the index and you're like, why isn't it moving? What's going on? And it's the memory sell-off, but I think there's a lot of health within this rotation that's positive.
Okay.